Today is Monday, January the 9th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, what will the Federal Reserve Chairman Powell say when he speaks tomorrow at 8 a.m. Central Time?
Okay, well, Powell is speaking in Sweden tomorrow, and I think his comments will be hawkish. The Fed does not like to see the stock market advance since it believes higher stock prices are inflationary, and in fact, they are. So in recent months, Fed officials have attempted to talk down the stock market when they had an opportunity to do so. I think this will be another chance for the Fed to do just the same, especially with stock index futures trading higher recently and with good gains today. So I would look for a somewhat hawkish series of comments from Powell tomorrow morning.
Speaking of the stock index futures, Alan, what's your near-term outlook for stock index futures?
So the gains today are linked to ideas that the Fed and other central banks may be less hawkish this year. So I think we'll see follow-through strength today. However, tomorrow, if I'm right that Powell's comments may be a bit on the hawkish side, we may see some pressure developing near term, but I think it'll only be temporary pressure. So if he does have hawkish comments, as I anticipate, and there is a break, I think that probably would be a buying opportunity tomorrow morning if that is the case. But the fundamentals and the technicals have improved in the last couple of weeks for stock index futures across the board.
Last thing, Alan, looking at the interest rates market, we've had a lot of movement there over the past several months. What are the charts now saying about interest rate futures?
Well, the charts are saying that futures have bottomed now across the entire yield curve from the short end at the 2-year notes through the long end at the 30-year Treasury bond futures. So yields have topped. Futures, I believe, have bottomed. Also, there's a triple top in the Fed funds futures contract in the March contract at 95.3150. And I think that will probably be taken out on the upside over the next couple of weeks. So any breaks should be used as buying opportunities for futures across the yield curve.
Thanks, Alan. Mark, turning to the grain markets, what are your expectations for this week's quarterly stocks report?
Thursday's report, we're expecting December 1st stocks come in at 11,080 million bushels. That's down about 560 million from a year ago stocks. This largely due to production being down just over 1 billion bushels from the 2021 crop. Our stocks figure is just below the average trade estimate heading into the report. And that despite our production figure being at the high end of expectations at just over 14 billion bushels. So domestically, we're looking for a little bit stronger usage than others. In soybeans, we're looking for stocks at the 3.22 billion bushels. That's up 68 million from last year. And relative to the range of expectations, we're pretty close to the midpoint, however, just above the average trade guess. Our production forecast at 4,376 million bushels. That's up 30 million from the November estimate and just above the average trade guesses. And we've got December 1st stocks pegged at 1.366 billion. That's just a touch below year-ago stocks and slightly above the average trade guess.
Mark, speaking of wheat, what is your acreage estimate for this year's winter wheat crop, and what's the outlook for wheat prices?
We've projected this year's winter wheat acres at 34.1 million acres. That's up just over 800,000 from a year ago. And if realized, that would be the largest amount of wheat here in the U.S. in 7 years. Our estimate is just below the average trade guess and what seems to be a pretty wide range of expectations. Our by class breakdown is 23.3 million acres of hard red wheat, 7.1 soft red, and 3.7 million acres of white wheat. Right now, the U.S. winter wheat crop is in dormancy, so we are not getting the weekly crop condition updates that we'll get once crop breaks dormancy this spring. But last week, the USDA did show that 64% of the country's wheat acres were in areas that were experiencing drought. This is down from its recent peak of 75%. So things appear to be trending in the right direction. However, in order to obtain trendline yields or better, we're going to need to see better moisture here this spring. As far as price outlook, I think we're still going to be in kind of a steady sideways to lower grind here until we just become a little bit more competitive in the global marketplace. We've got a huge crop in Russia that they just continue to offer wheat at prices below U.S. prices.
Finally, Mark, what have you been seeing from the money managers in the ag markets? Much change there?
Yeah, in the past 2 weeks, we have seen big buying here by the money managers in the agricultural space. They've added just over 167,000 contracts the last 2 weeks combined. This takes their overall position back up to the highest level they've been at in about 2 months. Chicago wheat is the only area in the ag space that the money managers continue to be short. Right now, we estimate they're at about 62,000 contracts short. And in soybean meal, that's the other one that's at the extreme. Last week, money managers added 12,000 contracts. That extended their long position to just over 140,000, which is a new record long position in the soybean meal. So depending on how things really start to shake out here weather-wise in South America, and particularly Argentina, I think we might be prone to some sort of liquidation pressure in the soybean meal here off of this record long position.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.